Good morning, team. Well, actually, good afternoon. It's Saturday, members weekend video. So here we go. Let's start out with the market. We basically took a nice little dump on Friday, which, as I mentioned, it was not unexpected. When we get a little bit extended from the, this is almost 5% here. This is almost 6%. When I mentioned when we get about 5 to 6, 7% extended from the 21, we usually have a retest, just like we did here, back to the 21. Now the key is that we need to hold this 21, and the 200 obviously up here is going to give us some headwind. Um, the SPX, the SPX, we hit our head. The SPY, the S&P hit our head on the 200 a few days ago this week. So we kind of coming back to the 21. Again, not surprising. Not surprising. I kind of mentioned that we were due for a little pullback just because of the overhead resistance. Also coming into the August September time frame of the year, it's not really a high strong month for uptrends. So be careful with that. Let's take a look at the Qs. Basically, we undercut this little breakout right here that I had. We're back inside of it. The good news is, we did hold the 21. Hopefully on Monday we could, even if we have a little down there on Monday, we could hold it and kind of go sideways and resume. We are coming close to. Here's the good news. We have a gap down that this 327, 329 will get filled. Okay, that will get filled. When? We have no idea. But this is something that is promising, at least on the upside. Now, the downside part of it, remember we had this little mini gap here from back in August 12th. Here we go. It got filled on Friday. So that got filled. Now the next one, if you notice, is here. And where do we come to? Almost, kind of like right there to that line. And we still have this right here to like 318. So four points lower. I would not surprise me to kind of come back in here and refill this, possibly even Monday or Tuesday before jumping higher. We also still have this one here at 321. Right, so this is another little mini one that needs to get filled within this bigger one. So there's some gap ups here that need to be addressed. We took care of the first one that was down here. So these things will happen. I mentioned gaps. Most of the time get filled. The good thing is we have one on the top side. So eventually we will come back up here to the 330 level, and get that sucker filled. This little one, this right here got filled. If you notice. That got filled a few days ago on the gap down. So we'll see. This is just basically coming back down to the 21. We're a little bit extended off the 21. Not surprising. The higher lows this is still a higher low from here. So we're above the 21. So as long as we're above the 21, we are trending higher overall. So in the short term. On the little longer term, we are above the 50. We're way above the 50, but we are above the 50. The bad thing is we are below the 200. So this 200, it looks like it's kind of evening out a little bit, but still, it's going to the 350 range, 345 range. It's going to offer major resistance. Okay, so I have some alerts that kind of triggered that I let them be there so we can go over it together. And I sent you the scan list on the email, the comprehensive list. I'm gonna go over just 128 stocks of this, just kind of a basic best stocks screen that I kind of created. Let me show you what this entails. It's basically just top basic my favorites of I guess scanning criterias. Earnings per share, in the 80 percentile, relative strength, 80 percentile, the strong accumulation and distribution, ABC, then the smart rating, which is basically a strength on the industry group, also AMB. Composite rating, that means the best of the best, the 90 percentile, top 10% stocks in the stock market. Industry group, I want them to be, at least top 85. I don't want 100 industry group, 120 industry group, because top 40 is kind of like the ones you want to go at, but there might be, like, for example, an ACLS, it's like, it's an 82 industry group, but it's setting up, and I've made money in this stock, and it might be coming around, and maybe next week this will become like 65 and so forth. So I want to catch them a little bit on the earlier side, and that's why I put that. I don't want anything less than $5. I mean, it probably won't even be any $5 stocks here, because of this right here. This last one, I'll get to it. And then basically I want some kind of volume, at least 200,000 shares a day on average, traded, just some liquidity. I need the stock to be above the 50 and above the 200. I don't want to be buying stocks that are below the 50-day moving average. Like I always say, below the 50, you get out. Above the 50, you're good, and you could buy. So I want them to at least be above the 50 and above the 200. Like that, I won't have like major resistance on top, on these stocks. Industry group, relative strength, I want them to be ABC. In other words, top 85, and I want them to be gaining strength. So at least neutral to the top 20 and 40. And then the average true range. Basically, I want stocks that move at least $1 in a day. The average move of the stock is at least $1. So in other words, I don't think a $4 stock or a $6 stock is going to move $1 in a day at an average. So that's why I just put $5 to capture, but I could put 10, and I'm probably not going to change this. Let's see, we have 128. Let's see. Let's go for 10 here. Did it change? Let's see. Still thinking. 128. So yeah, because we're not going to have a $6 stock move $1 on an average. I'm going to leave it at 10. So in other words, I don't want stocks that move like 80 cents, 60 cents, because I want to be able to pick up some beta, some alpha. So I want a stock that if it is going to break out, if I am catching it, if I am right on the technical analysis part of it, I'm catching a base breakout, or a double bottom breakout, or something that's going to be ascending, that I'm picking up strength in the stock, and I want to be right. I don't want the stock to move 45 cents in a day, and then okay, that's great. I want the stock to move $2-3 in a day on average, minimum one. So if I pick up a couple hundred shares, it's kind of worth my while. Again, I digress, but that's basically it. Okay, so that's what we got here. So we'll go over that. We'll go through these 120 stocks real quick. Okay, and then let's go through these 11 first. Okay, this is one that we had an alert on, that we got this trend line, this lower trend line that I hit, so that's still working. This one right here, reversed back in. We got the alert, and then reversed back in, so most likely would have been stopped out here. Minimal loss. This one right here, again, we got the alert this day right here, and we most likely got stopped out on Friday. Friday was a pretty much nasty day. This was a breakout, probably around right here. This is another Marcus Smith breakout, most likely right here. So that kind of still worked. This is breakout and then failed. This is a nice breakout right here, and kind of still held it. So this would have been one that we still would have been in it. NRG, we got this down trend line breakout, kind of retested again. So this probably would have been my stop, so I'll probably still be in this, but it's a utility, so I probably wouldn't have taken it. And then last but not least, right here, this kind of lower trend line, we got to, again, market Thursday and Friday was kind of like nasty, so, the early entry would have been somewhere right here at the 1050 range. So these things don't work. We made some money. We made some nice money this week on AND. And this breakout right here, And here again, just to reiterate why you take profits into strength, I took this, I made some nice profits here in the 135 range. He gave it all back. I was already out, so this is a great example on why you want to take profits into strength. And then the other one that I took good profits on what was right here. Let's see. Okay, we're back here. I have to put it on pause real quick. Okay, so let's get some alerts. So right here, this was the entry. When was the entry that I took? I think that was an early entry right here. I forgot what. I think it was the day. The day before. So it was right here. Sorry, let me rewind this. It was the day before. I kind of took it right there. When we kind of got above that day's high. I took it right here. I held it for the 21, and the next day I get this gift, this gap up, and I sold a pre-market into strength here, and that was I think at 53, and then the other one at 58 or 59, something like that. So that was great. Okay, so let's go over. Before we go over this, I want to go over these real quick. No, let's go over them first because I want to show you a little printout that I got for you guys to kind of go over the psychology of the mindset of a trader. But let's go to this 128 real quick, as quickly as possible. So Apple, again, the market just reversing. The entry would have been somewhere around here. We'll keep an eye on it. Right now, there's no setup. Let us settle back into maybe come back to the 21. So to look into this. This is a buyout. Nothing to do with this. Trend line right here. So if that triggers, I'm in. ADP. This would have been. Well, I had one right here. This is the low entry right here at 221. That would have been it. Right now it's to extend it. Let it settle a little bit. To extend it. This is kind of coming back a little bit at 273 range. That would be probably another kind of like add-on right here. I'm letting it settle a little bit. This is kind of going sideways for a little bit. Maybe we could do a little trend line here. Get an alert, and this could be something to look into. This is the kind of low base, but let's see if that gives us anything. And I told you, kind of came back. What to do with this right now? Again, I have my trend line here, so if it triggers, well, I'll take a look at it. This is a nice little flat base right here. That triggers my 21. It's kind of crossing up above, so this could be a nice little early entry somewhere here around 300, 301 area. But you want to let it clear 300. This is a flat low base. Transportation, trucking, I'll pass. This is something I like this right here. Put an alert down there. Okay, right here. Makes sense. Something like that. Just to get alerted. Doesn't mean I'm buying all these guys. I'm just this kind of like my very early entry into analyzing when I get into it, if it clears this area. I'm interested here. This is already that the entry would have been right here at 98. That would have been the entry right there. Right now, just it needs to settle back in again a little more. Somewhere around here, building a nice little side shelf base. Look at the weekly. It's kind of tight. Let me do it on the weekly level. Extended. BJ's, that's just extended, gap down, just nothing to do with this. The entry would have been around here, right? 7805, 7806. This already happened, so nothing to do with this. The entry would have been probably somewhere back here, but nothing to do with this. Nah, too low a base. Uh, this kind of bag, insurance broker, not too sexy, not interested. Nothing there. This kind of would have been the entry, right? You see this? That would have been the entry at 216, 217 around there. That's already gone. So 78, 62 right here. This I like the one. Yeah, I like that. Here we go. Do something with this if it gives me that. That's already gone. That would have been the entry right there. And then again, right there. Same thing. That would have been the entry right there. And then again, this little nice little tight little base right there. So I'm gonna let it settle in a little bit. Kind of downhill trending. This is a nice little base here in the 130s. Like that right there. That works for me. Again, oil and gas. Too volatile. Something here in the 60s. Oil and gas. That's gone. That would have been the entry, right? I see it right there. That would have been great. That's already way gone. Don't chase this. Got the gap up. Gone. Too flat. Nice little cup here. Nice little handle. I have my my alert right there. So yeah. Costco. This is my trend line I've had for a while back here. Let this kind of settle in a little more. Same thing here. I have my trend line, so whenever that happens, that's already gone. See, let me go back to it. This is a teaching moment here. Double bottom, right? This low is lower than this low. There's your double bottom. There's your pivot. There's your entry. See how that works out, guys? So simple. This is kind of a mini one right here. This is the lower one. Your pivot's right here. There's your entry. Right here. Double bottom. There's your entry. Okay, right now it's just to extend it. There's a nice little flat base right here. It's for me. Put it right there. Oh, sorry. I wasn't looking at the price. That would have been nice. I didn't see this. So this is a company takeover. So this is gone. It's nothing to do with this. Right here, that would have been your entry, right? Double bottom, middle, boom. Or if you want to look at it this way, double bottom, middle, right here. Then you guys stopped out. You wait for it to form again, and there's your entry. That's already gone. That's gone. Not interested in this. Don't know why I had this. I guess I was trying to play short here. So let me delete this. It's kind of coming around a little bit, but you see, this should be lower for a double bottom, and it's not. So this is not really a double bottom. This is a nice little base, and this kind of like took that out. So even took the base from back here out as well. So this is gone. You know, the setup has already executed. So I don't have a setup. You know, nothing to do here. This thing kind of poked his head above 500. It's nothing to do here. It already kind of triggered. And phase, obviously that would have been the entry, you know, somewhere back here. Kind of let it settle. Just kind of get an alert right here. Let me go to faster. Oil and gas. This is, I have enough oil and gas, alerts and stuff. This is already gone. This already occurred. This already triggered. This already triggered. Maybe something here. Containers, packaging. Let me give us a little alert there. Already triggered 77. I have nothing here right now. This gone already, right? This is already gone. 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 This is kind of forming a little bit of base, but again, energy coil. That's already gone. Same thing here. This is already gone. Hershey back in the 220s. I gave you guys here. That would have been the entry right there. You're in the 230s. But again, it's just now. This another setup would have been right here. That entry right there. But right now, right here, right now, nothing to do. Nothing to do with this. Nothing to do with this. Nothing to do with this. Nothing. Nothing. Kind of broke out. Kind of failed. Either a fail or retest. I don't know. Not sticking around to find out. Nothing to do here. Nice little lower level base here. Let me put it on my radar. Nothing to do here. No, that's already gone, right? That's gone. Something like that. And the lower entry right here. The lower entry would have been right there. That Friday. That's already gone. That would have been the entry there. Somewhere in there, kind of retesting it. Utility, not interested in utilities. That would have been the entry right there, 69.70. You still would have been holding it. 21 is holding up nicely. See how that works? Awesome. So let me do this just to get an early alert. Same thing, but this is too steep. Let's see the base here breakout. It's kind of almost there. Metal. 70 is kind of like your breakout, but it kind of took this and it's consolidating. I think it's above 70. I'll take a peek. This is a nice little high tight flag here. It would be nice if he goes sideways for a little bit, let the 21 catch up, maybe take off again, but it's insurance brokers. No, this is not too bad. But again, oil and gas, I have plenty of oil and gas exposure. That would have been the entry right there. See that? See how that works out? And it also works out where you had this little base right here. That still would have been the entry. That would have been a great entry if we would have caught this. But right now, nothing to do with this. Maybe if you wait for 88. I don't know, maybe 86, 17. It's forcing the issue. Not interested. MTDR. This is 90. Oh, I already have it. There you go. So above 60, I already have it. This kind of just climbing, step laddering. The entry would have been right there, right? I have a trend line right there. The entry would have been right there. This would have been right here. Nice entry. But see, now it's kind of consolidating. So this will be nice if it goes sideways for a little bit longer. If it clears that, I'm a buyer right there. Machinery. That would have been the entry right there. It's kind of going sideways. I'm going to pass. Mm, right there. But again, utility, gas. Let me leave that. It's kind of nice little base there. Here we go. Nothing to do with this. Nothing to do with this. This is a low cup. I need symmetry. I need to get back up here. This could be a low entry right here, but again, Chemical Agriculture is NTR. Eh, just to put it on my radar. Right there. I already have it right here, but this is probably gonna be a little lower cheat entry right there. Let me take this off. You know what? This kind of the bottom scenario here. It's 138, kind of right there. So it's kind of if this hits, I'm a buyer. You know why? Because it's giving me a double bottom breakout, and it's giving this little consolidation breakout. So if this trend line gets alerted, I'm gonna be a buyer. Probably gonna be in the 139, 140 range. I have this lower trend line. I'm just waiting for it to hit on semiconductors. Again, that would have been somewhere right here, but it's kind of going back and forth. I need to settle, kind of go sideways for a little bit, then take the entry. This is already gone. Obviously, you don't chase this. This is nice. This is nice. Little lower base here, right? So again, oil and gas. But I like the setup. It's kind of nice tight. It gives me a low risk entry, right? If it breaks that, if not, I'm out right there. Oxy, it's Warren Buffett. That's Warren Buffett right there. He's picking up more shares into this. So kind of the market kind of like that. But again, you don't chase it here. You don't chase this. This is already gone. Plab. I have some plab somewhere here. Again, might add to it right here, above 25. This is Peter Medical. Maybe a little mini little shelf right here. Let's do this. Yep. This will be a low risk entry. If it breaks this, where am I out? Right here. If it breaks this little upper channel trend line, if it kind of breaks it, which will also break it through the 50, I'm out. So might be like a 2 point stop loss. Man extended. That's already gone. This is coming back a little bit here. We got medical products. Argen. Argen is a good company. Good numbers. Good growth. So that plays into the narrative. So let me put the alert here. I already had this alert here at 39.40, and then up here. So I'm at here. I get into it here. This isn't. Oh, see this right here. This is like a no-brainer. Breaks above 34. I'm a buyer, even though again oil and gas, but the setup is pretty nice here. This is already gone, right? That would have been a setup right here, but now setting up again on the 200. Electrical power equipment. Let me see this 147.59, 147.60 here, 146. You know what? Let me do this. That's not too bad, because if it breaks above 147, 148, the 150 could be a resistance, and then you kind of have this trend line as your stop. 200, right? Makes sense. 200 to be the breakout catalyst. This is already gone. Low level. Already gone, right? Even the lower cheat entry right here, that would be nice. Sedge, just kind of back and forth. Low base, oil and gas. There's plenty of exposure in this already. We have a few more guys. Okay, 45, that would have been the entry right there. That would have been the entry right there. It is already gone. Back to 21. Down, a lot. on Friday. Computer software, tech took a hit. Um, I maybe if it gets above, to yesterday's Friday's close, and 21, and then this will be a stop right here, and your stop is right here, right? So that's a low risk entry. Kind of let it do its thing here. Let me see. Containers, packaging. Nah. I could look into this. Steel, I could look into this if it kind of breaks out. Nah, too wild. This is a nice pullback. Nice pullback to 21. So maybe something like this. And 21 will be a stop. Same thing here. I would do something like that. Like that, I'll build a little base here. This will be a trend line, and then get about 21 stop. UNH is kind of just, from back here. If you want to take in this entry right there, from back here in July, you would have picked it up somewhere in the I would say 510, 520, 525 range. So, yeah, kind of a slow mover. I'm not interested. UPS, the entry would have been right there, but it's below 200. So now it's extended. Don't do anything with this. Nothing here. Nothing here. Cup. So I guess right there. Gotta clear that. Wow, gone, extended. Low base, descending. That would have been the entry. Nothing to do with insurance, nothing to do with risk. Nothing to do here. That's it. We went through 128 stocks. So that's it, guys. That's pretty much, that's the thought process. You go through and you look at the chart, and you go through the best stocks, and you see what's working and what could be a trigger for you to get in. Now, I wanted to kind of just go through this real quick here. Psychology of this market, your four emotions can get you in the way of good investment. Just kind of, I'm gonna scroll down slowly so you can read it. So basically, just kind of have this in the back of your mind and things to look for, things that might trigger, errors you have made, things you have done that kind of like coincide with this, and it'll help you make you a better trader. So basically, you have pride, you have hope, you have fear, and you have greed. Pride, makes investors rationalize losses and prevents them from making mistakes. If you're prideful, if you're hopeful, makes investors hold on to stock that should have been sold because you're hoping that they will go up. We've all been there, right? Let's stop hoping. Let's look at price action and volume. Fear of missing out, FOMO. Fear of missing out leads to buying the wrong stocks or getting shaken out of the right stocks. If you buy extended, that's definitely a bad thing. Greed, don't be a pig. That's why I took my profits early on pre-market on AXSF, because they don't want to be a pig. They want to be greedy. Don't hang on too long. Take profits and move on. Okay, the market is rational, but investors aren't always. So this is basically it right here. These are your four psychological emotions that are kind of getting your way. Some quotes and some examples, some case studies. This is the Bill O'Neill. Basically where I model my trading from, and that book that I keep mentioning, you guys have to read. So whenever your money's on the line, you're going to be emotional, and the stock market is no exception. But the market doesn't know who you are, and frankly, doesn't really care. So what you think or what you like to happen. So price action. I always tell you, price action with volume. Okay, so case study. Let's shake out. I'm gonna just scroll real slow. You can pause the video and you can read it. Basically, when you have a breakout, most stocks come back and retest. So don't have fear that let me get out early or not take profits into strength. If you have a proper buy point, in other words, if you don't chase your stocks, if you don't chase it and you buy with the pivot, you can withstand a pullback because your stop loss is below the line of the pivot. So don't buy extended stocks. I would say no more than 2-3% above. I wouldn't even go 5% above the pivot. To probably fall basically. You know, if you think you know it all, you basically don't. Follow your trading rules. Know when the buy point is. Wait for it. Don't get ahead of the game. Have a profit target in mind: 10, 12, 15, 20%. Take some profit into strength and raise your stops. That's pretty much it. This is a very known quote from Warren Buffett. Be fearful while others are greedy, and greedy when others are fearful. Just don't listen to the news. When everybody's saying the world's gonna crash, everything's gonna collapse, that's when you should be buying stocks. And when everybody's, when the barber in the corner, is giving you stock tips, and they're making money in the market, the market's about to crash. It's oversold. So overbought. So start taking profits and hedge your bets. Don't fall in love. Pride, hope, and greed here. Don't fall in love with the stocks. If it's a great story, if it's a great company, you love the company, made you money before, why isn't it making you money now? Well, don't hope. Okay, don't hope. Cut your losses. 7 or 8% from your buy point. I don't even go that far. I'm between 3 and 5.5%. I'm even going lower to like between 1.5 and 3.5% right now in this market. When the market is trending, you're in a power trend, things are going up, then you go expand to 3.5, 5.5%. But take profits. Take profits on strength, and cut your losses. Don't fall in love with the stock. How low can you go? You don't want to stick around to find out. Get out when you're down 5-7% tops. Normally 3.5, 5.5. Okay. Don't be greedy. Don't be hopeful. Okay, don't buy cheap stocks. I told you about this. Don't buy cheap stocks. The stock market is not about buying cheap. It's about buying right. Okay, so I don't care about buying a stock that is not a $900 stock. I'd rather buy it at 907 than buy a stock that's $12 and buying it at 13. Because why? Because institutions are not going to be putting money into a $12 stock. They're going to be putting money into a $900 stock, and that's where the big wave comes. That's when the big trend higher comes in. Okay, so read this. And here's basically the research behind that. Most companies, you want to buy both, $10, $15, $20 stocks. Okay, and here's pretty much it right here. Keep fear in check. Keep fear, greed, and hope and pride in check. Follow your trading rules every time. Have a rules and stick with them. Do a post analysis of your trade, and I always tell you, put the work in. You got to study. You got to see what the mistakes were, and you have to write a rule to correct any mistakes you find, so you don't make that mistake again. And then here it is. Yeah. once you identify what you're doing wrong, there's something that you're doing wrong. Identify what it is and see how you can fix it, and that becomes a rule. And then you don't make that mistake again. Okay. So put the work in. Go through all this list that I've given you, and again, these next few months might be a little bit tough. So let's see what happens on Monday. If you have positions right now, let your stop losses trigger. Okay. All right, guys. Be blessed. If you have any questions, I'm here always.